how to fill out the W-4 for a person who is single and they have a side hustle or a side business, a business on the side. This is a popular condition or a popular scenario that we have not covered just yet. Now, let us know down in the comments below if you would like us to cover it for a married individual, but this is for a person who's single with a side business and how you should go about filling out the W-4. We're going to use the tax withholding estimator, which we know and love and, you know, highly recommend because it minimizes the guesswork. So let's dive in. What up? You got Mr. Smith, 0.5 of Mr. and Mrs. Smith, and like I said in this brief video, we're going to do the W-4 for a person who is single, but they have a side business. Now, in order to access this, you can go to the irs.gov website and, you know, search the withholdings area or the individual tax withholding area, or you can just type this in right here and it'll bring you to where we are now. But before you begin, make sure you have a few things. Primarily, you want to have your check stub. Your most recent check stub is the main thing that you need as it relates to this. And I'm going to give you some other things that with you being a business owner that you need to understand. Now, I will say this. No, I'm not a tax professional. I used to file taxes in the past, but this is more so based on things that I've implemented and benefited. But at the same time, things that I know from people who are tax professionals that they're able to use. I just want to use this as a, you know, educational, edutainment piece so I can give you some value and you can understand the power in having a job and having a business. Oftentimes, we feel as though as entrepreneurs, if we're not doing it full time, then we're hurting ourselves. Well, I'm of the belief that you can have a job and a side hustle, and that's very, very, very beneficial. So never let somebody tell you that if you're not working full time, that, you know, you're hurting yourself. Don't get me wrong. When you do go full time, once you're ready for it, it can be very rewarding in more ways than one. But embrace the fact that you have a job, because this strategy that I'm about to show you can be very rewarding from a financial standpoint and position you to no longer need your job. So let's dive in. Before you begin, like I stated, you need your check stub, your most recent pay stub, and then on here it says gather your, sorry about that, drop down. Gather your most recent pay statements for yourself, and if you are married, for your spouse too. So if that's you, then do that, and we may do a separate video. Let me know if you want me to do that down below. Gather information from other sources of income you may have. Also, have your most recent income tax handy, and that's mainly for the person who may not know if they qualify for certain credits and things of that nature. It gives them a guide, but in this example, it won't necessarily be necessary. Now, we're going to go ahead and jump straight in. Check your tax withholding for 2021. So basically, we'll click here, use tax withholding estimator. And this is how we enter inside the estimator, and it's pretty step by step, and it all starts with you. So filing status. So this person is single, and in this case, they don't have any kids. So if they did have kids, it would be head of household. Or if they're married, it would be married, and basically how you're filing, jointly or separately. So you just use based on what you know. Now, keep in mind, head of household is only for people who are unmarried, and they have some type of child that they're taking care of. If you're single, no kids, nobody you're taking care of that you file on your taxes, then you're just single. All right. May another taxpayer claim you as a dependent on their tax return? No. Do you plan to claim dependents on your tax return? No. Income. Do you or will you hold a job this year with paychecks from which federal income tax is regularly withheld? Yes. How many jobs do you expect to hold this year? Include jobs you no longer hold. In this case, we're going to say one. If that's not you, then, you know, fill it out accordingly. Pension. Will you receive income from a pension this year? No. Check all that apply. And you can always hit the question mark to see if something applies to you. It gives a bit of a description, so that way you can determine whether or not it applies to you. I won't do that on this one, but typically that's all you have to do if you're unsure on if something applies. Nothing applies here, so we're going to hit next. And now we get into income and withholding. It said, enter your income and withholding for each job and or pension you will earn income from this year. Each job should be entered separately. The order in which you enter them does not matter. We're only entering in one, so there's no order. Do you expect to hold the job the entire year, January through December 31st? Yes. Most people aren't banking on them losing their job or not having a job. So for this case, we'll put yes. How frequently are you paid? And on this one, we're going to say twice monthly. So we're going to assume this person is paid on the 1st and the 15th or the 5th and the 20th. That's considered to be twice monthly. If it was something like every other Friday, that would be every 2 weeks. So just understand the difference because it does make a difference. On what date did your most recent pay period end? All right. Today's date is the 10th. So they get paid on the 1st and the 15th. We'll say that the most recent pay period ended. Let's see what happened to the calendar. Oh, there we go, way up there. All right, so we'll say the most recent pay period ended. We'll actually say the 1st. Click out, click back in. We'll say the most recent, well, if they got paid on them, we'll say that the most recent pay period ended on the 31st. Keep in mind, I'm just, flowing. You will know. You'll be able to see on your check stub when the pay period ended, so you'll fill it out accordingly. Enter the total wages you expect to receive this year. We're going to say that this person expects to receive about $52,000 this year. Enter any bonuses. No bonuses on this one. Using your last pay statement, enter the federal income taxes withheld. Now, this is the federal income tax, not factoring in any other things that may be coming out, like insurances or other things. Specifically, federal income tax. So make sure you understand that. Sometimes it's listed as FIT, F-I-T, federal income tax. Sometimes it's listed as FED. So just know which one it is and fill it out accordingly. In this case, we're going to say that this person pays for year to date. So per pay period, this person pays $400. Year to date is a larger number. So if this is, so they got paid on the 1st and the 15th, they got paid 1 time, 2 times, 3 times. So it'll be $1,200 year to date. $1,200 year to date. In this case, do you or will you contribute to a tax-deferred retirement plan such as a 401k? In this scenario, no. We'll do a video that is specifically about those who do. Do you or will you contribute to a HSA, FSA, pre-tax child care credit account, or the cafeteria plan? In this case, we're going to say no. Adjustments to income. Most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments, or would you like to see possible adjustments? So we're going to click See Possible Adjustments. And I want you to go all the way down. So you look at it, student loan, educator expense. You see a lot of times when they say most people don't have a large enough adjustment to have a significant impact, it's usually something in there that could be beneficial if you understood it. So in this case, I'm going to give you just an overview of understanding. If you scroll all the way down to this area where it says certain business credits for reservists, performing artists, or fee-based government officials, this is for the person who has a side business. Now, if you dive into this particular part of the IRS tax code, you'll see that a lot of things fall under this category. Performing artists, if you understand that, then you understand it's like a person who's self-employed or, doing a side business. But if you look deep into it, you'll see. So if you want to elaborate on this, you'll be able to tell that this qualifies for a person who may have a side business. Now, I won't go into the tax code right now, because that's not what this is about. I just want you to know this is where you would put a particular amount. But before I do that, I want to show you how it is without you having tax deductions and with you having a business that will get you some tax deductions. Now, I'll show you where I'm pulling the tax deduction from, directly from the tax code. I will show you some tax code on that. So in this case, I'm just going to hit next, but I will get back there. So this is to be continued. All right. Deductions from income. You qualify for a standard deduction of $12,550. Deductions reduce the amount of your income subject to income tax. Most taxpayers take the standard deduction. Would you like to take the standard deduction or itemize your deductions? We're going to take the standard deductions. But as you can see, the itemized deductions are as follows. And most of the time, now in most cases, people, when they itemize, they don't tend to have more than what is listed in the standard deduction. So what you got to understand is, and they even tell you, if you itemize deductions, if your itemized deductions are less than your standard deduction, the calculator will use the standard deduction because it doesn't benefit you to itemize if it's not going to exceed the standard deductions. Keep that in mind. So take the standard deduction, click next. Tax credits. Tax credits are the amounts you subtract directly from your tax obligation. Would you like to learn more about tax credits? You may be eligible for to get your results without, or you may be eligible for or get your results without tax credits. We'll click to see them, but we're not going to do anything with them. I just want you to see some of the tax credits that are available, and then you can elaborate on that. All of these areas can be expounded on, but this video will be all day if I did that. So get my results without the tax credits. Now, I want you to see something. The person pays $52,000. They're taxed $400 per paycheck. In this case, it says the expected tax withholding $10,000 and anticipated tax obligation is $45.38. So the difference between these two numbers is the estimated tax overpayment, $5,462. So this person is likely to get a refund of $5,000 based on their scenario. Now, this is what I want to make note of. So it says this is your current projected refund amount. If you are happy with your results, you do not need to make any changes at this time. Now, what we like to teach people in income shifting, and if you're not already a part of the financial membership, the personal financial success membership, I highly recommend it, no matter if you're just working a job or if you have a side business, because it's a lot of education that we're not able to go into that the membership goes into that can put more money in your pocket. Do not look at it like a cost. It's literally pennies to get access. I recommend getting the $99 flat package and, $69 a month. However, there is a $35 a month that gives you all of the financial pieces that you need. And that can be tax deductible, especially if you have a side hustle, a side business, but it empowers you and puts thousands and ultimately hundreds of thousands back into your pocket. And I'll show you what I mean. Now, in this case, we always, recommend that a person use extra money that they could be losing by overpaying in taxes, because this is an overpayment. Imagine that $5,000 coming back into that person's household. Could they be out of debt sooner? Could they invest faster? Could they have a better savings? In many cases, it's not beneficial to wait on the refund check. I know many people have been, conditioned to believe that, but let's consider sliding into the middle. Say, okay, we want a $2,500 refund, but the other $3,000 we want to come in our paycheck. So this is what it tells you to do. For a refund of approximately $2,500, your job annual pre-tax wages, $52,000. To get your desired refund amount, you will need $259 withheld from each paycheck, $141 less than your current tax withholding. So that's $282 that the person will be able to bring back into their household. That falls directly in the range. Most people overpay $200 to $800 too much. This person is paying even more, but most people overpay $200 to $800 too much. Now, imagine keeping that $282 and putting it towards the things that I listed: debt elimination, investing. So now that money is growing versus you waiting on it at the end of the year, and you missing out on opportunities where that money could have been invested and be way fatter than what you would get in a refund. Now you're missing out on the opportunity to have a stash account. Stash by meaning a savings, not the actual stash out, but you're missing out on that opportunity, as well as the opportunity that comes from you being able to reinvest it in your business. Think about that. Think about you being able to leverage this money that you're overpaying back into your business. And that's tax deductible if you do that once you understand it. So this will be how that person would adjust it if they still wanted a bit of a refund, but they wanted to keep more of that cash flow. Now, let's take it back. Now, since this person has already paid in some, there's no way that they can get zero in terms of, or pay in zero. So in this case, we can get a refund of about $500. So say we want a refund of about $500. We almost want to break even. To get your desired refund amount, you will need $164 withheld from each paycheck, $236 less than your current withholding. And I think $236 less than your current withholding. So $236 per paycheck is what's going to be coming back into their household. So $236 times 2, we're looking at $472. $472 back into their household. Imagine what you can do with an extra 472. We're paying off cars a lot sooner, paying off credit cards, paying off student loans, investing preferably, and then reinvesting into your business, or a combination of those things, because now you got, you can take 100, apply it in 4 different spots, because you got 472 that you're working with now. So keep that in mind as it relates to this W-4. We did a whole video about W-4 to wealth. I'll try to link to it, W-4 to wealth or W-4 to millionaire, and how this form can position you to build wealth and ultimately become a millionaire if you take the extra cash flow and apply it to a certain area. So now what I want to get back into, because this is for a person who's single, they're just paying their taxes like normal, they don't have any kids, and they're not claiming business deductions. And I may do a one with a person who makes a little less income, so you can see even at a low income or lower than 52, it's beneficial for you to have a side hustle. Even if you're not the most profitable, you want to be striving to make some business income, period. Now, let's go back. Let's go back, because I know I skipped over the adjustments, but I want you to see how having a side hustle can benefit you even more. So let's go back. Let's go. All right. Now, this is the area I stated. This is what certain business credits for performing artists, fee-based government officials, as well as people who have a side hustle. If you dig into the tax code, you'll see what I'm talking about, or get with your tax professional. The main thing is you need to understand this so you can start getting in the habit of tracking records and understanding that at the end of the year you get with your tax professional and they show you how to maximize on that and offset your job income. That's the power in this section. Even though you make $52,000, the tax deductions that you get from having a side hustle, a home-based business, offset the amount that you earned at the job. What does that mean? That means that you're legally able to pay less in taxes on that same $52,000. Why is that important? That's important because if you don't minimize those taxes, then you end up overpaying even on the initial amount that they say you're required to pay. In this example, I think it was like $10,000. Well, you can lower that tax liability if you understand business deductions. Now, business deduction, I'm going to get into a couple common tax deductions that most people qualify for. There are hundreds, over 400, but all you need is a strong few to be dangerous. So let's get into it. Let's get into it. I already have it downloaded. All right, so these are some common tax deductions, and this is just another glimpse of things that you'll get access to, training that you'll get access to by being a part of the Financial Success membership. I highly recommend you click the available link down below and see where it says Personal Financial Success membership. You can get in just for the $35 a month, or you can choose a higher package. Nonetheless, choose something to get access to this membership so that way you can stop leaving money on the table. Most people who have a side hustle are leaving money on the table, not because they're not grinding hard enough or marketing strong enough, because they don't understand common tax deductions. So common tax deductions can position you to build some wealth. So basically, I'm going to just jump straight to some common tax deductions. So generally, you cannot deduct personal, living, or family expenses, because this is the difference between business versus personal expenses. However, and that's a powerful word, when they say however, that means there's some light at the end of that tunnel. However, if you have an expense for something that is used partly for business and partly for personal purposes, divide the total cost between the business and personal parts. You can deduct as a business expense only the business part that meets the general business deduction rules of being an ordinary and necessary business expense. So some people may say, well, you can't deduct everything. Well, some of the things that we're about to list are things you're doing anyway. So you're deducting a part of that thing that you're going to use anyway and making it tax deductible. That's powerful, because sometimes you may spend a lot of money on something that you didn't know could have been tax deductible, all because you conducted business doing it. Now, the more business you do, the more that thing that you may already be spending money on becomes tax deductible. So here's a list of things: transportation, car and truck expenses, travel, meals and entertainment. Entertainment is no longer allowed at the time of this recording. Interest, wages, home office expenses, gifts, depreciation, insurance, record keeping, other expenses, qualified business income. Now, we're just going to go over a couple, because I just want to give an example. And in this example, we're talking about transportation. So what does it say about transportation? Transportation is included when you're visiting clients and customers, going to a business meeting away from your regular workplace. Even if you're going somewhere and you're marketing your business, placing flyers or doing whatever you do, making deliveries. There's a lot of people who do deliveries. Getting from your home to a temporary workplace when you have one or more regular places of work. So say you're going and working somewhere remotely. You got a co-work space that you're going to. All of these are things that you can be writing off in the form of mileage. And with cars, you can either write off the actual expenses on the car or mileage. But in many cases, mileage is powerful. And here's what I mean. As I scroll down, we talk about transportation, car expenses. Now, like I stated, you can do standard mileage rate or actual car expenses. In my experience, the standard mileage has worked to my benefit. Now let's talk about the standard mileage for 2019, and it changes year to year, but usually it's at least above 50 cents. So what I mean, the standard mileage rate for the cost of operating your car for business use is 58 cents per mile. So that means for every mile you drive, or every 2 miles you drive, or every mile you drive, you get 58 cents. So for every 2 miles, it's $1. So for every 100 miles that you drive, that's $58. Most people are driving thousands of miles every year. So just as an example, using this, and we'll just use 50 cents for good numbers. Most people drive 12,000 miles plus a year. That's $6,000 in potential tax deductions, because if you're doing business, now those miles just became tax deductible. So it's a lot of opportunity for you to get tax deductions, which will go into the slot that I'm about to show you on the W-4. So if most people drive 12,000 miles, $6,000, which is 50 cents of those 12,000 miles, because you get 50 plus cents for every mile that you drive pertaining to your business. That's $6,000 that can be lowered on your tax liability. That's powerful. That's huge. And the question is, when are you going to drive your vehicle anyway? Absolutely. Let's scroll down. Let's go over a couple more common deductions, and we'll wrap up so we can get back to the W-4. Parking fees and tolls. A lot of times you go into different locations, you got to pay for parking. Well, tax deductible. We won't go into the actual car expenses, but travel. A lot of times if you're traveling away from home, you didn't know that you could be having deductions. If you're in the travel business, there's a ton of tax deductions that you can end up qualifying for. We actually have a travel portal inside our business, which puts us in the financial space as well as the travel space, which heightens the deductions that we're able to get, because our travel literally is product usage, because we have to make sure the product is being used in a certain way or operates in a certain way if we're going to be marketing it to be a product of the product. It's just like a person who might buy a physical product, they get that as a tax deduction. It's the same with us, and it may be similar to you. But your scenario may be different, but just understand that if you're traveling to certain locations, away from home, temporary assignment of a job, travel expenses may also be deductible. And I'm not going to go too deep into that. I just want you to know a list of some of the things that you can qualify for, because many people travel quite often, and that could be another quite a few $1,000s in expenses or deductions that you're able to get. Meals and entertainment. Like I stated, you can no longer take a deduction for any expense related to activities generally considered entertainment, amusement, or recreation. Because at one point you could. However, you can continue to deduct 50% of the cost of business meals. So let's say you're having a meeting and you bought all the food for everybody. Tax deductions. Say you're marketing and you decide that you want to set up shop in different locations and provide food, but when people come get the food, you're able to share your business with them, in a public location. Tax deduction. So you got to understand, and this includes bottled waters and beverages, things of that nature. Not alcoholic beverages, but, just a part of what would be necessary in terms of your business and providing food for people. Water comes with it typically. So make sure you understand that, because a lot of people are spending money not knowing that, I should have been keeping records. Tracking that, because that's what it all boils down to. Keeping receipts and tracking it in some type of software. Software is included in our personal financial success membership. The question is, do you have it, and are you using it to your advantage? Interest, certain interest on certain loan you may that you may acquire based on the loan that you may have took pertaining to business. You can write off the interest on some of those things. Employee pay. Now, this is one that's a big one. Family employees. A lot of times you can hire your children in order to get certain tax deductions. But not only that, if they're of age to do certain things, then it has to be appropriate. It has to fit into what their duties have to match. But it's certain things you're going to spend on them anyway, but instead of spending money on them and buying certain things, now you're able to make certain deposits. And you can pay them in multiple different ways. Payments for services of a child under the age of 18 who works for his or her parent in a trade or business aren't subject to Social Security and Medicare taxes. So keep that in mind. That's one of the benefits of it. If you hire a typical employee, you're subject to those taxes. However, if the child is under 18, you're not. So that's something to make note. Or business, Medicare tax, if the trade or business is sole proprietorship or a partnership in which each partner is a parent of the child. If these payments are for work other than in the trade or business, such as domestic work in the parent's private home, they're not subject to Social Security or Medicare taxes until the child reaches age 21. However, cover services of a child or spouse, later. Payments for the services of a child under age 21 who works for his or her parents, whether or not in a trade or a business, aren't subject to this tax either. So it's a lot of taxes you're able to alleviate by hiring your children. So I won't go too deep into that. But there's a lot of context that goes into that. But just understand that these are some things that you're going to do anyway. Now, there are hundreds of these things. Gifts, we're not going to go into that. Depreciation on certain things that are being used in your business. Self-employment health insurance. So as you can see, these are just some of the common tax deductions. Now this, for us, is huge. Our My Econ fees. Other common expenses, our My Econ fees. So if you get the Personal Financial Success membership, partner with your business, or adopt this as your business, those are tax deductible. Certain bank fees, tax preparation fees. You don't pay your taxes anyway, tax deductible. Supplies, business education, seminars and training, retirement investments. Certain ones are tax deductible. Smartphone services. That was another one I wanted to dive into. Your phone bill. Most people are using their phone to do business. You almost can't escape it. So the more you do business, the more your phone is tax deductible. For us, we do 100% of business pretty much on our phone. So because of it, we're able to write it off. Internet access, printing. I do a lot of printing, tax deduction. Webinar fees, business, mailbox fees, legal fees, advertising. You can spend as much money as you want on advertising. That's 100% tax deductible. Why? Because how are you going to be profitable if you're not doing some form of marketing? Now, let's get back to the W-4, because I gave you some examples that could easily be anywhere from $6,000 to $12,000 in tax deductions. $6,000 to $12,000, but I'm gonna be modest and I'll just do $6,000. So say that person got an extra $6,000 in tax deductions, which is not hard to get. I showed you how to get that just off of mileage alone. So they got the $6,000. We're gonna take the standard deduction as we did last time. We're gonna give results. Now, granted, this is what you have to understand. All right, so this is the projected. Remember, the refund initially was $5,000 is what they was gonna get. They was gonna get $5,000, but with an extra set of deductions, their refund will be even more. What does that mean? That means if you were to adjust this slider, you're now able to keep even more of your money. So let's go back to where we did it. We did about getting a refund of $500. So we'll keep it at that. So now in this example, if a person has a business, has a side hustle, but in addition to that, they were already overpaying in taxes. Now, since they have the education and understand how income shifting can help them bring in more money, that more money is now able to be used to pour into their business, to pour into investments, pour into debt elimination. Now they have even more grounds for creating more cash flow because now they have tax deductions. So let's see what that looks like numerically. To get the desired refund amount, you will need $134 withheld from each paycheck. That's $266 less than your current tax withholding. So that's literally over $500. Now that person is able to bring into their household, which gives them more cash flow and capital to put into all of the things that I've listed. So understand the power in this W-4. Even if you work a job, even if you have a business on the side that's growing, because it's not about how much profit you make, it's about how much attempts you make to get a profit. So understand the power in that. If you do not already have a financial success membership, I highly encourage it, strongly recommend it, no matter if you're in business or not. Yes, this platform can be a business for you that you can earn revenue from, but it's also a complement to the business that you're in. So hopefully this video has served you well. That's all I got for this particular video. Mr. Smith, signing out.